How's it going, everybody? And welcome to another episode of the Pursuing Greatness podcast. I'm your host, Gabe Peterson. This is the place where you can learn how to master your health, your wealth, and your love all in one place. So I hope you look forward to another great episode with another great guest. Before we get started, I do want to remind everybody that the best way to support the show is to simply subscribe, like, and share this episode with your friends. Also, if you want to get more involved with the show, check out our website at pursuinggreatnesspodcast.com. Other than that, I hope you guys enjoy. I hope you have your pen and paper ready to take some notes on some great wisdom coming your way. And I look forward to seeing you guys on the other side of the episode. All right, and we are live. Today we have with us Nate Peo. Nate is a residential construction professional and podcaster. Nate welcomes opportunities to step out of his comfort zone and emerge better for it. He candidly invites listeners to do the same through his inspirational podcast, All In, where he presents authentic experiences from his own life, along with thought-provoking yet practical advice. To do this, he draws on more than 2 decades of experience in land development, negotiations, budgeting, value engineering, and operations management. Nate, thank you very much for jumping on the show today. How you doing?
I'm doing awesome. Thanks for having me on the show, Gabe.
Absolutely. To get us started, why don't you tell everybody, who you are, where you're from, and how you got started in real estate in the first place?
Yeah, so my name is Nathan Peo. Obviously, that was discussed in the intro, but I grew up in Nebraska, Lincoln, Nebraska. Go Big Red, Husker football fan. I went to college for construction management, kind of a roundabout way. I started off in architecture school and then realized quickly that you had to be an artist to be an architect. And I didn't think that that was something I had what it took to make it as an architect. So I quickly pivoted into construction management, which was kind of the tag along course to the architects who couldn't make it. That's usually where we ended up. So, summers in college, I spent it doing construction activities, working on houses that we built. I was doing concrete driveways and patios and stuff like that. When I graduated college, I got a job working for a general contractor, and I didn't know anything about what I was going to be doing. Moved out to California, and they said, "Hey, you're going to go build water treatment plants." And I was like, "What's a water treatment plant?" I had no idea what that was, how you built them, or anything like that. But apparently, the company knew what they were doing, and they showed me around. So, did that for about 4 or 5 years. That's 2000 to 2005. 2005, if you recall, there was a really big thing going on called the housing bubble. If you were around that time, you knew it was just nutsos what was going on in that industry. And I got recruited to come work for a home builder because they needed people. And they said, "Hey, we'll pay you a bunch of more money than you're currently making. You work at less hours. You won't have to drive as far, and you have more of the responsibility." So I said, "Hey,
easy sell.
Sign me up. I'm going to go build houses." And so I went over and I did that. I worked in purchasing. That's where I started off, and that's buying the subcontractors that build the houses. This is California, so it's a lot of tract housing. And did that for a few years until the recession caught up with the housing bubble, and spent some time unemployed in did my own thing in the meantime. Had a landscape business, and I worked with a lot of real estate investors at the time who were buying distressed properties. They started off renting most of them out, and then they very quickly turned into flipping them. So, they were taking a $400,000 house in 2008, buying it for $150,000 in 2009, 2010, and selling it for like 220, something like that. On average, they'd go through and clean it up, gut it, re-landscape it, take all the evidence of, previous tenants, previous residents out, and resell it. And then when the housing market started kind of peaking back in, I got hired on for a company this time that worked in multifamily development and did multifamily development construction for about 4 years there. And then I got recruited to go work for an owner this time who was a land developer. And that's where I've been for the last 6 years. And we could, the division I work for goes out and we take the capital from the company, purchase land, entitle it, and get the plans drawn up, build some apartments, and then we work with our in-house leasing staff to rent it all up, and then we just rinse and repeat.
Awesome. I love it. That is a very roller coaster of a career that you've had so far. You've gone through almost, well, soon to be two giant recessions, and you've come out the better for each. Well, hopefully in the future, each time. Um, so you got started in college as an architect, but you found that you just didn't have the drawing chops, which totally makes sense. I thought about that for a second, and I'm definitely not a drawer. So you went into construction management and graduated and got a job in a water treatment plant, which is that's got to be had to have been a an interesting experience to say the least.
Oh, it for
Um,
sure is.
and then you went in. You worked with a home builder in 2005 and in 2008 when the economy collapsed, lost your job, and you started a landscaping business. So I mean, you went from one thing to another, but you kept getting back up, which I love to hear. How quickly? Just this is a real small tangent, but how quickly were you able to get that landscaping business up and running?
Um, I was probably laid off in July, and I knew it was coming because the company I worked for they're a publicly traded company, and every quarter, 1 month after the quarter ended, there was a round of layoffs. So I knew I was getting it soon, and I got it 1 quarter earlier than I thought it was going to be. So I was kind of preparing for something to happen, and I was like, hey, this will be my chance to try my hand at entrepreneurship and go down this path. So I was kind of planning a lot of it anyways. And then when it happened, I was like, oh, quickly, I was like, I need to apply to get my contractor's license, and I need to like go out and start doing things. This was in 2007. So, you know, being on social media and having like big websites wasn't really that big of a deal at the time. Like you got most of your work from word of mouth, or you handed out like flyers and stuff like that. So I was just trying to figure out the ropes. I probably got my first project in October, and I was doing a decent amount of work where I was consistently busy every week, probably by January, February the following year. So it probably took about 6 to 8 months of ramping up to a steady flow of income.
Awesome, awesome. I love to hear that people starting businesses just kind of out of nothing and then going forward with that, especially in real estate. So after that, you got involved with flippers, and then in multifamily, where you're at right now, you work with a land developer who, it sounds like, you buy the land, entitle it, and then develop it, and then release it up.
Yep.
So that is definitely an interesting business model, considering, especially in the higher value areas. This is what a lot of people that I've heard have been considering doing, being that there are fewer multifamily opportunities out there. So they're looking at development versus just going out and buying something. So kind of take us through the process that you guys use. You're looking for, first you start out with actually just finding the land, and then you go through entitlement, land development, and then actually construction. So when you're looking for the land for these multifamily units, what's the analysis, your due diligence that you go through?
Well, I think it's simple and complex at the same time. So for anybody that's doing real estate investing, I think the principles are going to be the same. First off, is you have to have a risk tolerance and some guidelines of how you underwrite deals and projects. And so once you've established what those are, what your risk is, um, as compared to maybe alternate forms of investment, then you're just looking at deals and see if they make sense. And by make sense, I mean they're pretty close, and you do some more due diligence. So we're always looking at things that come across, and like, hey, maybe you could combine this land with some other land and make it a better project, or maybe this land could be split off, or whatever it is. And so you constantly look at various alternatives. And so like you get a piece of property project, and it says like, hey, this on paper looks like it has some legs. It's kind of close to the desired return you're looking for. So you want to start investigating if it makes sense to do it. And I think a lot of people, when they go out and they're looking at deals, they might fall in love with the deals and not the financials of it. So they try to make a justification so that it's going to work. Like the rents are going to go up, or we'll lower the expenses, or we'll do things with the financing to make the deal work. And so at the end of the day, it's a pretty simple math calculation. Does this, if you invest this much money, are you going to get the return you're looking for with the comfort level of safety? So a lot of times people go, hey, I just want a return. I want to get some money back on my IRR. And we don't consider other factors like, what are your opportunity costs for other investments, or what is your exit strategy of how you go out? So, you might go in and say, hey, like I can't find a deal that makes sense. To buy here because everything's really hot. It's a real flashy market, so I'll go out and build something. And you might think like, I'll just go and build something at the same return that I could go buy something at. And you might decide that that's not such a good idea, because you should be compensated for your risk. What if a million things go wrong? What if your assumptions are wrong? What if COVID hits in the middle of your project and you get hit with construction delays and increased costs, or you can't lease up because nobody can come out to your project? Like, what are these things that could happen? So a lot of stuff can go wrong when you're developing versus acquiring. So you want to build in a little bit of buffer that's acceptable to you. And I think the more conservative you are, the longer you're going to be successful in this game and the less bad decisions you're going to make. And I think me, myself included, when I've wanted to do things on my own, is sometimes we get impatient because we've looked at a bunch of stuff and nothing's making sense. We start changing our criteria so it starts being acceptable. Like, instead of just being patient, like, hey, when the market's up, it's just like anything else. You don't buy high and sell low. You buy low and sell high. And so when the market's high, you shouldn't be buying. When the market's low, that's when you should be. But we're impatient because we see like, oh, the prices are jumping up. Like, how are we going to, like, if we don't get in now, we'll never get in. And it's like, well, if the deal doesn't make sense based on the financial components of the structure in real time. So like, let's just say whatever you could build it for today or buy it for today, and the rents today don't make sense. Like, you're just guessing if future economics are going to correct that decision, and that's a gamble. And then you start betting on what the economy is going to do, and I think that's where most investors in real estate lose, is they start leveraging some deals and they start trying to make things work, and they make a wrong bet, and they make a bet a little bit too big, and then once that one's starts coming down, then some of the good deals that they have need to be exited, so you can cover some of the losses or some loans that might be due on the stuff that didn't turn out so good. So that's like how you can very quickly come tumbling down.
Yeah, absolutely. And I associate with that entire experience very well, because I know, like when I was getting started, just I don't know, 5-10 years ago, I really just wanted to buy something, and it is really hard when when you're looking at all these deals and you don't find anything that actually makes sense. The numbers don't make sense to you, and your mind starts to get into that area where you're just starting to justify things. You're like, so what if the NOI isn't where I want it to be? I can maybe I can like improve the structure, or I can slap some paint on and boost up the rents. That'll compensate for all these things that I'm looking at. And so definitely when you start to get into that mindset, you should stop, because that is, the numbers are the numbers, and that should be your guide, not your. I mean, there is value to creatively adding value to the property, but you should definitely be looking at it face value and not trying to project it into the future.
Mm-hmm. Yeah, when the market was going gangbusters in 2007, I think just like anybody else, I was like, hey, I need to get in on this, and bought a real estate property, and then I bought another personal house and turned my old house into a rental property, and hoping rents are going to keep going up, and of course they didn't, or the cost of the houses actually declined significantly, and it was not a good time for me investment wise, I lost, the rental properties and the houses and lost a bunch of money. And then when I moved, and with my then girlfriend, fiance, and now wife, um, we had a nice house, and the house next to us sold for like, a third of the price of what, she had paid for the house when she
Ooh,
bought it. And it's just like,
that's
oh
tough.
crap, if we hadn't had those losses from bad decision making, like we could have moved in and picked up a ton of properties that like very quickly, like it was like such a small window of like a $300,000 house selling for 150,000, and like you could have picked up these houses like all day long, and you know 2-3 years later they're back at 250, and then they're probably in the 300s now, and you could have just been like, you know renting them out, or sold them and moved on to bigger stuff. But it's because of this impatience of like, we got to do it now because everybody's doing it, and then we're not in a state of waiting for the time to strike because we lost it in the ups, and now we can't participate in the downs. Like, it's like hit twofold. And so I think you got to be very cognizant of the market, not get kind of caught in the frothiness of it. And I think there's a lot of, maybe it's the people I'm associated with, but I feel like there's been a lot more people interested in real estate investing and getting started in it. And it kind of feels a little bit like the 2006-7, where everybody's like, hey, I'm doing it, I'm in it, I'm buying extra properties. And it's like, you know it's home prices are pretty high again. The market's pretty good for sellers. Like, I don't know if it's a good time or not, but it feels like more and more people are stepping into it, and they're going to be making some of the same mistakes I've made in the past. I think a lot of people make when they first start investing in real estate, is getting caught up in what the market's doing versus what the metrics tell you should be doing.
Yep, absolutely. Yeah, definitely be conservative on your numbers when especially if you're just getting started. You don't want to have your first investment be a loser, because that'll demotivate you for the future. So be conservative, and make sure that it all makes sense on paper. And the hard thing about the market, that I've found is it's impossible to predict, obviously, and so it's difficult even when you do find great deals. Like, we're seeing great deals come across our desk that are on paper, but then you look into the future, because there's been so much talk about a future downturn, and so we're hesitating. We're not sure whether these deals that look good right now, based on the current market, will still be a deal, 6-12 months down the road. So kind of on that topic, where do you see the market going? I know none of us have a crystal ball, but just from your seat, what are you seeing?
Well, right now in August of 2020, um, things don't make sense. Like, GDP is at a huge downturn. Like, was it 32% down?
Yeah.
Unemployment numbers are through the roof. What's the stock market at? It's ridiculously high. What are rents doing? Rents are at all-time highs. Vacancies are, they're not happening. Renewal rates are happening. Um, Home sales are up. If you're selling your house right now, it's going quickly, and you're just like, this doesn't make sense. Is this sustainable? I don't know. Like, at least in California, you got to make a lot of money to live here. Like, average rents could be 2,500 to 3,000 bucks a month for 1,500 to 1,800 square feet in the Inland Empire. You go coastal, more than that, and you say, well, that's a lot of money. What does COVID do to work from home? Maybe this changes and everybody's able to work from home. So maybe I don't have to live in high rent cities to do my job anymore. Maybe now I say, hey, you know what? I could go move to Texas and I could pay half the rent. And I can still do my job here. And, you start looking at things. And so who knows what could happen? You could have areas see major upticks in cost of living just because people are coming from high rent districts down to low rent, raise that up. And then you might have places like, I think commercial real estate is going to be hit pretty hard. I think you're going to see a lot of businesses go bankrupt. So if commercial real estate drops, then I guess, there's a vacancy, so why would you build new spaces? You're going to try to repurpose the existing, so that's going to probably drop rent. So if you're in commercial real estate, that might be a real like bloodbath for a while. Like who knows what's going to happen, and then that might trigger down to other things. You have PPEP baby ending. Who knows? They're trying to fix it right at this moment, maybe extend it. And if they don't, do all of a sudden people stop paying the rent? Like right now they're paying the rents, but evictions are being on hold. So this is like one of the weirdest times. But I gotta think if I was uncertain, I think the best bet would be like, hey, like it's not the decrease in construction costs or the decrease in like opportunities present themselves hasn't really shown up. So I think on the I would be patient, sit on the sidelines. If I had some projects kicked off, ready to go, you might say, hey, look, what other thing, is this, if you're financially sound to make the decision, right? And you say, does this make sense in 30 years based on the assumptions that I've made? Then yeah, you might do it anyways because you're going to have ups and downs no matter what through the course of 30 years. But if you're in this thing for like, I'm lucky if I'm get out of this deal in 5 years by the skin of my teeth, like then it should be like a hard no, man. The market's too uncertain. But if your finances make sense for 30 years out, and you say, should I start now or should I not? Costs aren't going down. Like they're not going to get cheaper. And if they do, it's going to be for a very short window. And the likelihood of you pinpointing the time for it to make sense to do it. So I would say the best time you can always build a project now, if you're in a long-term minded, is now. Costs are never going to be cheaper than they are. They tend to rise over time. So it's there's no crystal ball. I think every deal has got to be individually looked at, and it's got to be looked at too with what what could you stand to lose if it didn't work out? What, you doing loans? Can you get a loan? Are you self-financing? Are you doing, hard lending? Like there's so much stuff that it'd be I think it's a sit on the sidelines and wait and see, and then move in either when there's some certainty, or wait for a little bit of a drop and swipe stuff up.
Yep. I'm kind of in the same boat as you. And what I'm really interested in is kind of how COVID is. I mean, you mentioned it, how COVID has kind of pushed people away from office space and into their homes, and so they're doing remote work and they don't have to go to the office. And so I'm really curious how that's going to be playing out in terms of the distribution of the workforce. I know right now everybody's kind of like packed on the coast. But if that plays out even more, there could be some really good opportunities inland. And I mean, I live in Seattle, and so I've been looking at places like Idaho, and well, not Oregon, but Idaho and even Montana, because I'm thinking, I mean, I'm not going to make any decisions until things start to actually show up. But it seems like that would be a logical next step from this type of movement. So we'll see. As you said, nobody has a crystal ball, so definitely stay on the sidelines until.
And I think you got to pay attention to what the jobs do, So like tech in Idaho and Boise is kind of this little sub market. Reno, Nevada has this little sub market. You get people moving like, hey, we don't have to live in San Francisco or Seattle to have these tech hubs. We can go outside, have lower cost of living, lower cost of office space, more room to play and spread out. And the world's digital now. We don't all have to be congregated in this spot. So many things could change the way people do their businesses, and that could, drastically change the way you decide how to invest in your deals.
Yep, absolutely. Now that's all very, very great points. I had written down here, I was going to ask for your guys' land development, why you chose to develop versus just buy. And I know you work for a larger company, so do you have insight into why they develop versus just buy?
They've been around, family-owned business for the 50s. I think they've just kind of been that way. That's been their culture, is do it themselves. I mean, they started off as a home builder, grew to be one of the largest home builders in California and Nevada. And then, they eventually sold off a portion of their business to KB Homes, and then they became this land developer. And it's probably just been ingrained in their culture of like, hey, this is something that we do it ourselves. We pay attention to what we know what goes into it, and that's important to us, and they want to continue to do that. And you don't know, I guess, what somebody else is selling you, but that's not the only way to go. There's lots of people that are in our market, our space, that make a lot of money acquiring properties, and there's a lot of people that make a lot of money building it themselves and flipping it, and there's a lot of people that do a combination of both, and then there's some people that build for themselves and build for other people, and it's people that just all they do is manage properties too. Like there's a lot of ways to skin the cat, and you just kind of go with what makes sense for you personally and your values and your investment objectives.
Absolutely, yeah, that makes sense. I'm sure if they started out as home builders, I'm sure they had their processes down, and they were just like, this is what we do, and this is how we're going to keep going forward, and so it just made sense for them. Awesome. Well, I loved everything you said so far about the real estate. I do want to ask about your podcast, because I've had a lot of people ask me, how they can use podcasts to kind of grow both their real estate business and non-real estate business. And so you just launched, you have launched the All In podcast. So kind of, how's that been going, and what's your experience so far growing that?
Podcasting is a ton of fun, and it's one of those things where I was really nervous about doing it, and I probably talked myself out of it for a few years. But once you kind of do it and you get used to doing it, it becomes a ton of fun. I think you're starting off and you think you're going to be maybe a mini Joe Rogan or something like that and have hundreds of thousands of people. And so you try to get like like my show's going to be so perfect, and then it's going to be this. It's like, well, it's really not, it's really going to be anything else. You start from the beginning. It's going to improve over time. But the coolest thing about it is you can have conversations with people you wouldn't have met under other circumstances and get to know them. Especially, like, I look at it this way too. It's like you're able to punch above your own weight class. So like,
Yeah.
I might be able to reach out to somebody, like, let's say my favorite author wrote a book. If I called them up and said, hey, I want to pick your brain about this book you wrote, they're like, I ain't got time to do that, But if you said, hey, I got a podcast, I'd like to come on my show and promote your book, sure, like, I will spend a half hour and answer the questions you want. You can get people that you wouldn't have, had a reason to chat with otherwise, or maybe not taking your call. So if you're in any business, like, let's say you go, why would I want to have a podcast? I'm in sales, or I'm in this and that. Like, why wouldn't you do that? You can invite your ideal clients to be on the show and talk about what they're up to, or you can get your expertise known. And what people don't realize is you're more than one dimensional. Like, you have the Real Estate Investing Club, you have your other podcasts, you have a variety of topics you like to talk about. But if I only know you as Real Estate Investing Club guy, there's going to be this misconception of who you are. And maybe I might make a decision not to reach out to you for some reason because I think you're this way. But when you're on a podcast, you talk about, well, we're talking about real estate, but we're also talking about podcasts. We're talking about maybe some life experiences we have, or things we're interested in, or, what's the history? Like, oh, I just said I went to Nebraska, and somebody's listening to it. Well, I went to Nebraska, and that was kind of cool. I was kind of interested. Let's have a conversation. Then we have a conversation, and we realize, hey, I kind of like think that there's an opportunity to continue this relationship further. Maybe it's a friendship, maybe it's some business deals. Maybe I have a major problem I need problems with, and his brother just happens to have the solution that's perfect, and I didn't know that, and all of a sudden we're connected. So to me, the podcasting is just this amazing thing of being able to connect with other people you wouldn't have had the chance to. And once you start doing it and realize, hey, this is a conversation I'm doing for myself, more so than like how many followers and likes I get, you tend to do better at it too, because you're having real authentic conversations. So if anybody's considering doing it, I'd say you're not going to regret it. You do it for a period of time. Just, don't say like, oh, I'm going to do a podcast and then do 5 episodes and give up. Be like, hey, I'm going to do 50, or I'm going to do it for a year. And then at the end of the year, then make a decision. Was that for me? Did I really enjoy it? Or did I hate it? And am I quitting doing it because I gave up, or am I quitting doing it because, hey, it's it did what it was needed to be done, and I've scratched my itch, and I'm going to move on to other things. But it's going to open a ton of doors, a ton of opportunities you hadn't expected to have happen just because you want to do it.
Yep, absolutely. And I mean, that's been my experience too. Is you know, obviously there is the marketing aspect of podcasting. You know, if you run a business and you start a podcast for your business in the topic that you guys are experts at, you know, you will get leads, and that is a benefit that you might want to consider when launching. But I mean, me personally, what I've gotten the most from is just talking with my guests and just listening to everything that they've said. Like I mean, pretty much well, not everybody, but most of the people that I have on the show, especially Real Estate Investing Club, they have more experience than me. They're much further along in their career than I am. And so it's just like you said, I get a punch above my weight class and you know, get wisdom from great people who have, you know, great real estate careers. So I love that you said that. And so if anybody is listening or watching and they have considered doing a podcast, there's more than just the business side of it. It is also a lot of fun. But as you said, definitely give it a few, at least 50, in my opinion, episodes, because the first 20 podcast episodes that I did were just crap. I didn't know what I was doing. That's awesome. That's awesome. I love that you're doing that. How have you've already launched it, or how many?
I launched it in March, and I'm probably recorded or booked guests over 100 episodes. I don't know if I've recorded all 100, but I'm definitely booked over 100, and I've probably released 50-ish or so.
Oh, nice.
Yeah,
And is it?
and they've gotten so much better over time too.
Yeah, you kind of get into a rhythm as you start to produce them. It starts to make more sense.
Yeah.
Awesome. So this, you know, shoot, look at that. Before we even got on this podcast, I told you we were going to shoot for 20 minutes, and it's already been almost 30. So
Yeah, I was just noticing that too. I was like, we got a half hour in already. That went quick.
All right. Well, we are at the end of the podcast, so I'm gonna move us along here. Every guest that comes on, I always ask them the same questions. One, if you could go back to the Nate who just started, who's just you know, considering being an architect, and give him one piece of advice, what would that piece of advice be?
That piece of advice would be, don't wait to do the things you want to do. Start doing them now, whatever it is. You know, earlier in my career, there was ideas of like, hey, when I make a bunch of money, I'll go do these travel. I could never do it. Or I want to start my own business, or I want to invest, or I want to build a network. Like, these are all things that when you do them earlier in your life, you think, oh, I'll always have time later, or opportunities will be better in the future. And there's never a more opportune time than right in the moment. And that's what I encourage myself to do, is do those things you wanted to do then. Don't think you're going to have more time down the road to do them, because chances are you're not, and you'll regret that. You could have had that sort of trip to Fiji, you know, back when you were in your 20s, and you didn't have a care in the world, you know.
Absolutely. Yeah, I love that. Don't wait. That is really good advice. Next question. It's kind of a two-parter. You know, we get our information from many different places, from podcasts, from TV, from our friends and family, also from books. I love getting my information from some books. So if you could give a recommendation for your favorite business/real estate book, and your favorite any other book, any other area of life, what recommendation would you give?
Right now, the book I'm really interested in right now is Story Brand by, I forget the gentleman's name that wrote it, but that one is really great about marketing and telling your story. And I think no matter what you're doing, it's relevant, whether you're creating a personal brand, whether you're creating a marketing campaign, or maybe you're just trying to sell or lease apartments. Like, being able to tell your story of why should somebody choose this place over any other is so critical. And if you can tell a better story, I think it's going to resonate. Personal book, I always love to recommend The Alchemist by Paulo Coelho.
Nice.
It's just an amazing book of a young boy on his journey to discover his personal treasure. And even though it's a fiction book and it's a parable, there's so many like real lessons that you go, hey, this is what life's about. And I think if you kind of take those like I read it once a year, and there's always something I didn't pick up on the time before that just makes me like, oh yeah, this is why things happen the way they happened, and we're learning from it.
Yep, I absolutely love The Alchemist. It's a great book. I've read it plenty of times, and I love that it's so short because it's not like, right now I'm trying to read Anna Karenina, which is like this giant Russian novel, and I'd always said that I wanted to read it because people rate it as the best book ever, but it's like 1,200 pages, and it's just hard to pick it up. And so I love The Alchemist because it's short, sweet, really good book. Awesome. So yes, so we are at the end. Again, thanks, Nate, for coming on. If somebody wanted to get in contact with you, maybe be on your podcast, just reach out for whatever reason, what would be the best way for them to get in contact with you?
Go over to natepeo.com. That's Nate, P as in Paul, E as in Echo, O as in Orange.com. And from there, you can find the podcast. You can find all my social media links, and you can see everything that I have going on right there. And that's the easiest way to get connected to me.
Awesome. That is Nate Peo, Peo.com. I will also put his LinkedIn URL in the show notes. So if you want to reach out to Nate, you can get him at the website or through LinkedIn down below. So again, yep, thanks for coming on. For everybody who has showed up here on this journey with us, thank you guys very much for showing up. Best way, again, to support the show is just to subscribe, like, and share with your friends and family. Other than that, we look forward to seeing you guys on the next episode. Thank you guys for sticking with us on another episode of the Pursuing Greatness podcast. I hope you got a lot of value out of that guest. Again, the best way to support the show is just to subscribe, like, and share with your friends and family. Also, check out pursuinggreatnesspodcast.com if you want to get more information about what we do and what we offer. I hope you guys have a great day and keep living in integrity with yourselves. And I look forward to seeing you on the next episode coming shortly.